President Paul Schatz and JP Morgan Private Bank Chief Investment Officer Richard Madigan. Good to see you both. Thank you so much for joining us. I don't know about you guys, but I was a little taken aback yesterday when Janet Yellen came out and said the Fed staff is considering more tools to help banks raise more capital. I feel like the banks have been raising so much capital and they're in a good position right now. Did that surprise you?
A little bit. The banks have been raising capital for 5+ years. And the Fed's given the banks an enormous tailwind. It's almost been a hurricane at their back to, quote unquote, organically repair their balance sheets. At some point, you got to say enough's enough.
Yeah.
I understand why they want to do it. They want to, shield against any possible crisis again. But at some point, the banks need to take responsibility on and take care of their own capital.
Right. Well,
it's also reactive, though. Sorry, Maria.
Yeah.
But reality, IMF meetings over the weekend, a lot of construct in terms of what's happening with European banks. So I guess the optimist in me says they're looking at global capital markets. There's a big issue with regard to recapitalization in European banks.
That's a great point. Right? They're still deleveraging and they're still raising capital in Europe.
It's a global theme.
Yeah. So you don't necessarily expect this to turn into more rules for the banks, that they have to raise even more capital.
We're going to dance around this theme a lot. I think there's a legitimate discussion around capital behind the too big to fail dynamic.
Yeah.
But our issue is looking at what BIS capital levels have already raised. U.S. banks are very well capitalized.
Paul, for the broader market, you think we're headed into a new phase of this market. Tell us what your market thesis is.
So, bull markets transition. What was leading in March of '09 is not leading today, and I think we're transitioning into the next and what I would say final phase of the bull market, where you get sectors like energy. Finally, energy, I think, will begin to lead at some point this quarter, and we've already seen it in utilities. We've seen it in REITs. Staples came back from the dead recently. You're seeing it in Staples. So what was leading before, we saw the high-flying Momo stocks have been hit lately.
Yeah.
They're certainly due for that rubber band snapback bounce, but I think the market is just rotating as it normally would in a bull market.
Yeah. Richard, in 2013, the momentum players, as Paul just noted, were really leading things.
Yep.
Do you want to sell those momentum players and buy a value?
Like everything, this is about market discipline. And we're sending a note out to our clients next week where I've said this valuation rotation, if it were happening in a market that was naturally rising, we wouldn't pay attention to it. Because what you're watching is bootstrapping valuations of overextended valuation coming down into cheap to keep the market well supported. Two key things, market's still very well supported. The problem to last year was we picked up 75 to 80% of returns from multiple re-rating. This year, we're going to be paid for earnings. So earnings are the key this year.
That's why you want to be selective in terms of where you're allocating money.
Yep.
Are your clients risk adverse right now? Are they feeling like they have to be invested in equities? What are you hearing?
I mean, not at all. And what's funny is we've had a big push within the private bank globally over the last 2 to 3 years in terms of reminding people to get back into markets. If you look at flow of funds into global equity and bond funds, you've seen something like $650 billion since 2010 put back into markets. That's all come from cash. So there's been a lot of money put back into markets very constructively.
It's also kind of sort of the beginning of the big move from fixed income into equities. We've seen, if you look at some of the PIMCO flows, and clearly they have their own problems there, but many investors saw what happened when Bernanke announced the taper last May. So a lot of folks have said, you know what, I've been invested in bonds. Now probably it's time to get a little equity exposure. It may not be the right move long term, but I think it's the wave we're going to see in this phase of the bull market.
Well, I mean, you would think that when they got their statements and they saw what they had in fixed income and they said, wow, I'm actually losing money, when you consider inflation, that would have triggered it. But
ironically, they haven't. I mean, can I throw one out?
Of
because there was a huge debate that went on last year. This fear of a great rotation. Everybody was going to run away from bonds and run into equity.
Exactly.
If you look at the flow of funds on that $650 billion, it's about evenly split between stocks and bonds. But the rotation within fixed income is dramatically different. So people have gone into credit and out of core. But my joke was going to be, so for the Peanuts fans out there, remember Linus? The blue blanket is how people look at bonds. It's the security blanket, and people aren't going to let go of it.
I love that analogy. The blue blanket. You're right. You're absolutely right. All right, let's leave it there for a minute. We're going to take a short break, then come back more with Paul and Richard on the latest GDP number out of China. What does that tell us about the markets? Then we will head live to the New York Auto Show. We'll talk with Nissan's Andy Palmer and GM's Tim Mahoney. I'm Maria Bartiromo. This is the opening bell on the Fox Business Network on a day that the market's up 100. Back in a moment.
You know trading, or do you? Because if you did, you'd be trading binary options with Nadex. Ask yourself, have you ever been stopped out by market spikes? Are you tired of margin calls? Do you have a hard time trading slow markets? If so, the answer is Nadex binary options. So you know trading on Nadex is fast and exciting. What you don't want to know is what it feels like to get left behind. Join the Nadex